Confidential computing allows us to run compute on data without any of the computers or the servers involved in that process. We've got blockchains are velocity of capital machine. We all keep hearing about it, the energy bottlenecks and everything else. Bunch of people who are trying to produce decentralized compute. And I think that is going to create a lot of tension. What has that control? The most important use case that we have is AI.
We must not give away the printing press of our time.
Yes, the amount of power that is caught up in technology and money is a fast way trap to totalitarianism.
Welcome back to the Upwind podcast, where we explore the technologies, people, and ideas driving the world forward, one pivot at a time. Today, I'm speaking with Michael Casey, someone who's been shaping conversations around digital trust, decentralization, and the future of finance for more than a decade. He's author of several books on blockchain and crypto, and now part of the Advanced AI Society as chairman, a movement pushing a decentralized, human-centered artificial intelligence. In this conversation, we dive into how AI, blockchain, and sovereignty intersect, why decentralization might be the key to avoiding the AI totalitarian trap, and how proof of control could redefine privacy, power, and progress in the digital age. This episode is as much about technology as it is about freedom, and why, in a world moving faster than ever, sailing upwind is the only way forward. Welcome, Michael. Good morning, Michael. Thank you so much for being here.
Hi, Lily. It is my pleasure.
Welcome to the Upwind podcast.
Again, my pleasure.
I've known you for a good set of time. I think one of the first people that I met in the blockchain space, like 10 years ago.
Yeah, it is. It's about a decade now. Yeah.
And you've been so influential in the blockchain space, helping us all refine our philosophies about this with many books and many projects. So thank you so much.
You're welcome. It's been a wild ride, right?
Wild ride. So my first question today is, what inspired you to get into blockchain in
the first place?
Yeah, and why did you stay? Why did you stay through all the ups and all the downs?
Good question. The second one's the hardest one, I think. But I just couldn't get out. Once you're in, you're locked in. I think that's the reality. I got into blockchain by way of Bitcoin. I'm that much of an early player that there really wasn't blockchain as a concept. It was just starting to emerge. The Ethereum white paper was just starting to come together. That was in 2013. But it was Bitcoin that first got me in, and largely because I'd spent 6 years of my life, a few years before that, in Argentina. Right. So Argentina, as many people know, is possibly the poster child for completely dysfunctional economics. It has monetary crises that come every 10 years or so. There is an absolute and complete breakdown of trust between the people and the government, and that manifests in currency crises on an ongoing regular basis and hyperinflation and all sorts of problems. This is part of the Argentine story, right? And I'd written about it because I was the bureau chief for Dow Jones in the Wall Street Journal from 2003, 2009, in the aftermath of what was then their worst crisis. And I kind of tried to get my head around how do they get out of the cycle, because there was such a breakdown of trust between the people and the government that it didn't matter which party was in power. There was such an institutional breakdown that money was never going to work, right? In a fiat environment, that trust is critical. When it's gone, you don't deal with it. So took a little bit of an interest in Bitcoin, wrote about it for the journal when I was, by this stage, I'm back in New York. And I got a phone call from Jeremy Allaire's people from Circle, who were just founding Circle at the time. And they said, your article was, you kind of got it, but you don't really get it. Why don't you come and learn a bit more about it? And so a few journalists and I attended a dinner, and there were a lot of people there that did not fit the sort of scruffy, wild image that I had of Bitcoiners at that time. These were serious investors and people with some political pedigree and a variety of other things. And Barry Silbert was there. And I think it was Barry who just said, like, you had that time in Argentina. Just imagine if that monetary system was run on a mathematical protocol. And there was a sort of probability and a consensus that could not be broken by any politician. So you would trust the math and not the government institutions to deliver the money. And I just went, wow, that's big. And it just really resonated with me. So that's it. I went down the rabbit hole, as we all say, and started writing a regular column in the Wall Street, WSJ.com. It wasn't really in a paper. It was just a small little column within a blog, within the online section. So not exactly high profile, but to a lot of people, it was a big deal that the Wall Street Journal was covering Bitcoin. So Paul Vigna and I co-wrote that blog. And that led to the age of cryptocurrency. And eventually I got so into it, and I was inspired by a lot of blockchain ideas, particularly around property rights and real estate, which I've now found my way back into to a degree. Our good friend Bill Ty and I got interested in this because of Fernando de Soto, who I went to the blockchain summit with at Necker Island, and that led me to MIT and everything else after that. So yeah, it began with a Argentina connection, and then bit by bit discovered a whole lot of other ideas that I thought would be wonderful use cases for this technology.
Wow. So 2013 was when you wrote that article?
Yes, the very first one I wrote about Bitcoin. It was something like, I think the Cyprus crisis had happened. This was when this is in the middle of the Euro crisis, and Cyprus had put a 10% tax on withdrawals to try to stop the run on the banks, and people were like super angry about that, and they said, there's this alternative, it's called Bitcoin, and Bitcoin was rallying, and I sort of wrote something saying, I don't know what this thing is, but it's kind of interesting but weird, and it wasn't a very well informed article, that very first one. No.
Yeah, it was still fantastic. It brought you a whole community.
There, yeah.
It brought the whole community.
Trying to figure it out, I caught the attention of some people who knew more than I did, and that's often the best way to get yourselves into something.
Yeah. So in Argentina, we saw the cracks in a failing system, very obvious cracks. Mm-hmm. In Cyprus, we saw, again, some very obvious cracks. In the Western world, the developed Western world, the system is broken, maybe not as broken, but certainly broken. That, $1,500 now felt like $900 feels like $1,500 in a relatively short period of time. We're seeing major inflation that people are now starting to feel like, whoa, in their young people maybe didn't feel it because, and now they're starting to see it like really play out in front of them. Older generations have been able to see it, right? Like someone in the 70s maybe purchased a property for $3,000, and now that same property is $3 million.
Yeah. I think it plays out in asset prices more than consumer prices, by the way, but that's still a huge problem for affordability and and the way that we create bubbles and all sorts of things, right? So,
major bubbles. And now we're in the AI space, in the age of AI. But the early founders of crypto and the early community of crypto could see that these dots had to connect. Like the AI agents will need a system to work on that has integrity, very importantly, that has integrity. And this is what you're working on with the Advanced AI Society. Can you tell us some more about that?
Yeah, so I think like from all of this journey that I've been on, where we're always exploring use cases for blockchains, right? And as I said, I took a special interest in real estate on chain early on because of concern about property rights and the idea of immutable ledgers being used to maintain property. This is just one example, right? There's so many of them, but I actually now believe that the most important use case that we have outside of, say, money itself is AI. And there's a number of reasons for that, right? One is if we think about the process by which AI systems learn, right? The machine learning process, and then the inference and everything else. All of that is taking in a massive amount of data. And you know what? It's our data, right? The only way it can train itself to become these powerful answering machines and that we have is by just ingesting a massive amount of human data. And so most of the LLMs really began just taking in a lot of public data that we'd put out there, right? So I was initially concerned before this sort of generative AI phase with what I see as the ravages of Web 2.0. So Facebook and Google and everything else, that we now understand it through the maxim that Bruce Schneier gave us, which is that you are not Facebook's customer, you are Facebook's product, right? This idea that we've become this quarry of information and we're basically, that's sucked out of us. And then these algorithms are used sort of like with a very centralized controlling, we call it digital feudalism. This is the book I wrote with Frank McCourt, to control us, to manipulate us. And that's not a conspiracy. That's literally how these algorithms work, right? If we take that and put it into the AI age, so we've got these black box machines doing essentially the same thing, ingesting massive amounts of information and then turning it into a mechanism that essentially could control us. I'm not saying it is, but it could, because the incentive is there to do so. Then we are in big trouble, right? So, ultimately, I just think that the amount of power that is caught up in technology and essentially information control, right, and money, is a fast way track to totalitarianism. It's because if the incentive of centralized monopolistic capitalistic control are aligned with just nothing more than just the fastest return you can get on those dollars, and you own everything because you've got a market cap worth $5 trillion in the case of Nvidia, then you just become so powerful that you control everything. So we need to break all that up. And that's what blockchains are great for, right? Because we now have collective ownership structures. We can tokenize the compute. We can give people ownership of their data and reward them for contributing that. And also we can protect it with cryptography so that data is private and is still valuable from a computational perspective, because you can run the compute on the data, but it doesn't ever get fed into some algorithm that you have no control over. So one of the things that we're talking about doing through the Advanced AI Society, my organization, is to establish a principle we call proof of control. And we think this is where blockchains and related technologies like zero-knowledge proof cryptography come together and allow us to reassert control over our data and over the models that will be just fundamental to how we operate in the coming digital AI economy. Okay.
Super simply, how would that work? Mm-hmm. What are the bricks?
Yeah, the bricks, good to use the word bricks, because it's actually, and this is a big part of what our society is trying to do, right? So it's a stack. It's a stack of technologies. It's not just one solution. And this is important because OpenAI, they're not the only one, but they're a classic example of the centralized LLM. They are pursuing an increasingly verticalized strategy, right? All these people that thought they would build apps on top of OpenAI, there's vibe coding apps and things like that. Well, every new release coming from that company, oh, by the way, here's its own vibe coding app rolled into it, right? Or here's a video produced. So the entire stack. And now you're getting these deals between Oracle, OpenAI, Microsoft, and it's just this oligopolistic control of the compute, the data, all in one package, right?
Right.
So we have a much more fragmented environment, and that makes it harder, but we've got a bunch of people who are trying to produce decentralized compute, right? They're using DePIN networks, decentralized private infrastructure networks. Some of them are doing storage, like the classic storage play is Filecoin. So you have to store the data somewhere. Well, Filecoin will give you a distributed structure. You're not just giving all your data to AWS, it's being distributed across multiple holders of that storage who are then being rewarded with tokens for doing so. And the same thing is being done with compute, right? But there's also things like model verification. How do I know that this model is doing what I expect it to? And a blockchain is a very good source of provenance and transparency, and so we can apply those principles to the structure of how these models work. And then you're moving into this world of agents, right? AI agents. We need to prove that we own that agent, right? We need to prove that that agent has an authority that rolls back to me, the person in charge of that. And again, those are the sorts of things that specifically with things like self-sovereign identity, but tying that to a blockchain of record gives me the capacity to actually demonstrate knowledge over that, right? So basically, you've got all these different layers. Now, that's a problem, because the way that this is going to work, the way that we're going to actually make a difference here, is if meaningful procurement happens from enterprises. And we think that it's in all these enterprises' best interest to do this. This isn't just a do the right thing to save humanity perspective. This is literally protect your own ass, because you've got data that you really should be very protective of. It's your trade secrets, or it's your sensitive customers' data, or whatever. Why would you give that to a black box, Silicon Valley machine and have no idea what's going on with it? You need to have control over that. But if I'm a procurement officer looking at I'm a CIO running an AI project within my company, and I have to look at, like, there's the confidential compute piece, and there's the distributed compute, and then there's the storage, and then there's the file. It's a fragmented thing. It's really hard, right? I'm still just going to write a check probably for AWS and for OpenAI and be done with it. So this community needs to come together, and that's what we're trying to help with the society, and to offer solutions that are essentially bundling these things together. So it's a one-stop shop. And you just, and so we need more interoperability, we need more integration, we need more collaboration between all these players, because, there's strength in unity, and the market cap of the 7 biggest companies that are all AI focused right now is running well in excess of $20 trillion. And that is a war chest that is very hard to defeat unless we sort of collectivize or rather collaborate and come together.
Right. So what kind of regulation would be the dream regulation for you right now if you were trying to get...
Interesting. So regulations can be a double-edged sword, right? I definitely think there's a place for regulation in this, but I don't think regulating the activities of AI itself is going to be constructive. And certainly I think we've seen some of the early efforts from the Biden administration and then the EU AI laws. They tend to be designed for the biggest players in supposedly good intention to hold those big players to account, but what you end up doing is creating a moat, right? Because this model, OpenAI or Meta or whomever, it gets blessed because it sort of falls within the category, and anybody else outside of that is not accepted within the regulatory framework. So you get regulatory capture, right? Compliance becomes very expensive, and that makes it really hard for startups who are trying to come in and do something different to do that. So I'm certainly not in favor of anything regulatory that would, add huge burdens of compliance on startups and sort of essentially be a bulwark to the monopolies. It would be completely counterproductive. But I am a believer in antitrust law. I've always been a believer in antitrust law. I think that there are ways in which governments can step in and say, you know what, you are too big. You have too much power, and you do need to break this up. Or there's got to be some structure in which, mandates, for example, out of about whether or not a internet platform can have rights to your data, or what you should be allowed to do with your data, are good examples here. In Utah, there's a law on data portability that basically says you have the right to take your data, all of it, and move it to some other platform. This was a social media focused law, but its principles are valuable here. And I like to think of the 1996 Telecom Act, which was really transformative in terms of the internet, that was all about breaking up the baby bells, the regional telecom monopolies, and requiring them to run over their networks competitors, right? So those are the things that we need here. We need regulation that forces competition, that forces innovation, that forces the capacity for people at the edge to participate in this. So that would be valuable. I really don't know that regulation is going to be the answer, though. The policymakers just can't keep up at this point. So we need to find private sector solutions that really break down these monopolies ourselves by doing end games around them in different ways.
Yeah, this podcast is called the Upwind Podcast because
it's a big upwind, yeah.
Because I see how we all sail against the resistance, you especially, having to pivot to that windward mark, and it's just constantly shifting based on what the wind, and it just feels like that is a real upwind battle, like gale force winds.
It's easy to get discouraged on that level, but I also think that obviously what you really need are the economics in your favor, right? It's easy to make the the moral argument, we should do this because we need human beings to have control over their lives and their destiny, and owning your data in the digital age is synonymous with that in my mind, and so we can make that moral argument. But if it comes like, yeah, but I can't make as much money if I do that, you're not going to do it. Now, I think that if we frame this correctly, there's an enormous amount of money to be had in this. I think that if we look at AI and its potential, and its market potential, its solutions potential, its transformation and disruption potential, it is going to be so much more effective and therefore valuable from an investment perspective if it is if it's localized, if companies themselves are in charge of their data. Just think about a health research lab that's sitting on massive amounts of super sensitive data. And they're not going to put that into a black box. They can't. It's too risky. It's very important that this data is protected. So that potentially very powerful pool of information that could be used to solve, find a cure for cancer, or to sort of resolve all sorts of challenges in supply chains or whatever, can't be used because of the sensitivity. If you now bring in decentralized, privacy-preserving, own your own data, proof of control technologies that allow those companies to unlock that data, we can unlock this. We can turn AI into a machine for solving so many problems, and we turn it into a race around the actual end users, not a race towards some amorphous AGI, whatever the hell that means, goal that these egotistical Silicon Valley titans are actually all racing to get to. No, we don't need to win the performance race. We need to win the race to resolving climate change, or microplastics, right? We just talked about that, or whatever it is, right? We need to resolve those races. And a centralized 5 big massive company model is going to race on all the wrong terms. So let's bring the data, let's bring it out at the edges, and that's where the value is going to be. That's going to be a wonderfully dynamic, innovative, open economy in which there'll be countless different new innovations and ideas to come out of.
Right. So it's show me the incentive and I'll show you the outcome.
Yeah.
But how do we grow the pie to be that much bigger than what it is now in terms of use cases?
I think the pie is always bigger when it's spread more widely. I think that's history has shown.
I mean, that's
right?
Blockchain.
Well, it's blockchain, but it's also anything. It's like any decentralizing technology. Like the printing press was a decentralizing technology. The Renaissance and the emergence of sort of industrialization came out of the opening up of information that Gutenberg's printing press enabled, right? So whenever you spread things and you spread property rights and access to information to a wider class of people, you get so many more ideas and so much more innovation and so much more collaboration and so much more human progress and prosperity. So it's a no-brainer to me that we should open this up.
Okay. So in crypto, it's like not your keys, not your crypto, and you're saying not your keys, not your data. Yeah. Or not your keys, not your keys, not your future.
Not your data, not your future, not your life.
Exactly.
Right? It's that important right now. This technology is just, it's not, we all sit there just marveling at how incredible this technology is. That should be exciting and terrifying at the same time, right? Because we're talking about a technology that is essentially able to replicate human thinking, or will be able to at some point. So this is our lives. This is who we are. This is our place in the world. So yes, it is not your keys, not your data, but therefore not your life.
Right. Okay. Property rights. Hernando de Soto. I was going to leave this for later on, but I've studied his work, inspired by you to study his work.
Yeah,
and a big part of what he says is, one of the reasons why developing countries are developing is because their property rights are just not secure. They're just not reliable. Mm-hmm. And that's what keeps them small. That's what keeps them poor. Yeah. And I think you're probably saying the same thing, that if we don't have property rights, our own property rights in this new world of AI, for this new land of AI, it'll keep the mass amount of people poor.
I go on the property rights drum a lot. And
I know.
It's all, so one of the things I like to remind people is that if you're not a student of history, on this particular topic, everyone is a student of history of some sort, but on the story of property rights, it gets very interesting. So if you look through history at all these different moments in which there's been an extension of property rights to a wider class of human beings, you nearly always see this explosion of innovation and prosperity, right? So, you can talk about the invention of the, limited stock company in the Netherlands in the, at the end of the 16th century, and that was this much wider capacity for people to participate in capital, to invest, right? That led to industrialization, that led to colonialism, which of course had some negative outcomes, but at the same time really was globalization in its earliest form, and an enormous amount of wealth creation came out of that. If you look at China, when Deng Xiaoping finally commandeered control of the Chinese Communist Party, one of the first things he did was to mandate that every Chinese person living in what was then a government-issued home could own it and could do something with that home. And it transformed the real estate market, but it also transformed cities, and it transformed businesses and everything else that ran with it. So the Chinese economic miracle, which obviously is just a story for history about the eradication of poverty, it really began with an expansion of property rights. So a Communist Party to a degree, but obviously a very fundamental, capitalist concept at its core. So just imagine if we took data, right, the most powerful, valuable commodity there probably has ever been, right? Think of how much wealth has been built amongst these gigantic companies on the basis of what their most powerful asset is, which is that data. And imagine if all of that data was now in the hands of everybody else. So we took one of those property rights revolutions and we applied it to this, the digital economy of our age. Like, where would we be? It's almost unfathomable how much we would unlock, economic activity and growth and ideas. This is the biggest property rights opportunity of our time, for sure, or any time.
It's certainly, if you think about where we're going in the future, where we've been, where we're going, what a combination of the minds within our space think about the future, and we're seeing a lot of more government services online, more property transactions online. Ideally, we have a government shutdown here right now, right? I mean, if we were more efficient, it wouldn't hurt so much. If we had some sovereignty in terms of proof of personhood, and we could actually have some agency over the transactions that we need to do, whether that's you wouldn't need a government agency to be that middleman, because you have some major property rights, which is your identity.
Yeah.
So if we're speaking about self-sovereign identity, where are you with that?
Yeah, so I see the self-sovereign identity movement, in particular a project that I'm involved in called the First Person Project. And First Person is a really smart way to take essentially these verifiable credentials and things which could be something very traditional like a passport or whatever, but it could be any form of credential, and to tie that to your social connections. So your sort of web of trust, as is often called. And if all these people vouch for you and underscore these credentials, the technology it's such a powerful proof that it says you're a human being, right? And that's going to be a really important question to answer in the AI age. Is this a bot or is this a human being? So First Person does two things. One, it gives you that proof of personhood, which we think is going to be just absolutely vital in the AI age. Do I know that this agent was authorized by a human, or is there some bot masquerading as a human that's controlling that? Those questions are going to be critical. But in addition to that, it also gives you control over your social network, right? So the most powerful thing that really gave Facebook and Meta its dominance was this idea that and I think it was Mark Zuckerberg who coined the phrase, the social graph. Facebook, not us, we couldn't see it, but Facebook could see it. They could see all of the connections, right? that Lily was connected to Michael, was connected to Bill, was connected to Frank, was connected to so-and-so, blah, blah, blah. And that all of that was this very intricate, complex web of human connections, and that some of them were very valuable because of the interplays between them. And then once you learned more and more data about them, it was even more valuable because this person was worth a lot of money and that connection could be... So all of that could then be fed to advertisers who would then use it to extract value. Again, you're Facebook's product, not Facebook's customer. All of that was used under that model because they owned the social graph. Well, under this idea, the first person project, which, by the way, it's being run. A big part of it's being founded within Linux at the Linux Distributed Trust Foundation. So there's a lot of serious developers involved in this, Berkeley and MIT and others, and it would that technology would give you control over a proof of personhood, but also a proof and a control over your social graph, so that you and your verified relationships can choose together what data you will share to the rest of the world, what permissions you will give on that. Frank McCourt, who I wrote Our Biggest Fight with about this stuff, the last book I wrote, he likes to say, let's get the apps to accept our terms of service, not us accepting theirs, right? We are the ones who will say, here's my data, and here's my relationship data, and here's our relationship data, and you know what? Yes, you can have it, but here are the terms. Will you pay us? Will you give her a better discount? Will you give a chance? Like, that's the future that needs to emerge. And again, that's a property rights concept. So yeah, I think you've got, on the one hand, AI, which is increasingly being referred to as the agentic economy, with AI agents operating and executing on our behalf and buying our travel tickets and investing in our various investments and all those things that we think these agents could do far better for us if we gave them the authority to do so. But you also have to have the human proofs and the human authority underneath that. So it's all very well to solve AI and make AI decentralized and privacy preserving and everything else, but where is the human being in this, right? That's a critical piece. So I think these two things are married intrinsically, and that we need to resolve both of them: the decentralization of AI and the self-sovereign, non-biometric, because biometric inherently creates problems, but non-biometric self-sovereign identities such as the first person project.
Recently you said that if we don't have decentralization, we will fall off a cliff. Right?
Fall off a cliff would be one metaphor. I think that we are at a crossroads. I'm not the first person to say this. You'll see a number of slides out there when people talk about this, and they'll have the fork in the road, and you've got utopia on one side and dystopia on the other, right? And I just think, I remember I said this to somebody the other day. I said, he said, why are you interested in this? Why are you doing this advanced AI society? I said, because I really believe that, it is a fast track to totalitarianism if we concentrate all of that power in the hands of a very small set of companies. And he kind of laughed, like, that sounds like a hyperbolic conspiracy theory thing. But no, I mean, it's like, this is our information systems are the foundation of our democracy. They are the foundation of our economic markets. They're how the information systems of our world are designed, which is why I talked about the printing press before. The internet. The internet transformed the world because information is power. If you concentrate not just the information, but the ability to convert that information into something that can execute in your interest and no one else's, the incentives that go with being that race, that sort of like driver of the race to be the fastest, the bestest, to give the 100x return to your investors every single time will inherently lead you to control, which is and this technology is so powerful. The blurring of the line between politics and economics becomes so blurred that it's irrelevant. This is totalitarianism. I mean, this is why, Nazi Germany was built on information technology, right? It was the control of radio. It was the control of The printing presses, it was a control of a variety of new technologies that enabled propaganda to be spread as broadly as it could. We have to remember these things. So this is a dangerous thing. On the other hand, as I just described, if we unlock this and we give people control over their data and over the models and over the applications of those, and we have a property rights revolution, we've got utopia. We've got so many problems that will be solved, right? So that's why I use this in stark terms. I don't apologize for it. It's an extremely, it's a do or die kind of moment.
It feels as though we are at a point where we could be giving away the printing press of our time.
That's a great analogy. Yes. Imagine that, right? The printing press, its whole point was to break down the power of the church, right? So think about it's a great metaphor, right? Churches were these sort of centralizing forces. There was only one guy in the village who could actually read, certainly could read Latin, because most of the Bibles were in Latin, and that was the priest. And the priest would give a mandate from on high, the word of God, and all this congregation would sit there just like absorbing that information and going off and, dutifully, with all that fire and brimstone fear in them, doing whatever the church wanted them to do. And then all of a sudden, now Bibles, but then ultimately every other book, could be accessed by others. It could be books everywhere, and it could be printed in different languages, and that inspired the idea to teach people to read. And then you had kindergartens and school teaching and everything else that emerged out of all of that. So the printing press was a liberalizing, opening up, pro-access kind of concept. The idea that you would give that printing press back to the church and just say, you're the only one that can choose which Bibles we should read. Right?
Wild.
Yeah.
And terrible and so catastrophic.
Yeah. So look, to me it's a no-brainer, but it's very hard, I think, for people to step back and see this. We get stuck in the weeds of what we're doing, and we look at these AI models, and everyone seems to be better and better, and they're all hallucinating and getting worse, right? Because they've got recursive data problems and all sorts of things. But at the same time, they're producing more and more sort of visually arresting results, making it go, wow, look at that. And so it's very easy to be distracted by the wow factor, because it is incredible technology. Like, it's incredibly powerful, but it is prone to so much distortion and so many errors, and we have no way of knowing where those errors are coming from because it's a black box, right? So yeah, I mean, it's people are, I think, distracted by that, and they have a hard time seeing the forest with the trees. But we believe that there are a number of forcing functions that are going to make these things critical. We think corporate boards are going to demand control over data because it's so valuable and so sensitive, and because the ability to protect trade secrets is going to become a very important need for companies. So you're going to have a compliance element that's going to drive us to what we're calling this proof of control paradigm. But I think you're also going to have an economic forcing function coming from the scarcity of the resources that are going into the AI economy. One of the most important ones, of course, is compute, which in itself is dependent upon energy, right? We all keep hearing about it, the energy bottlenecks and everything else. And I think that is going to create a lot of tension around who and what has that control, because people are then going to seek alternative ways to get around it. Because you've got OpenAI with a $500 billion deal with Oracle, right? Around data centers, and then you got companies like AWS, of course, and others just tying into these sort of monopolies. But there's all these new ideas around edge compute and distributed models that allow us to push certainly the inference, but certainly hopefully the heavier machine learning capabilities as well, to a much more distributed environment. And that's going to be an opportunity for folks who are being locked out of the race for data centers and energy. that this current centralizing model will have. And so you've got an economic incentive as well that I think will push people to say, oh, yeah, let's go for this decentralized compute model. Let's go for DeepIn and tell us what that's all about. And so we actually think that there's a lot of opportunity that will come from these like bottlenecks and constraints that the current economic structure is going to run into.
When you talk about proof of control, can you tell me exactly how that works, like technically?
Yeah. So it's actually, I mean, well, let's start with certainly anybody familiar with blockchain, right? You mentioned it before, not your keys, right? So having control of a private key is a proof of control, right? It's proof that you can prove to the blockchain that you are in command of that particular address, right? That's what that is.
Mm-hmm.
So we're talking about taking those sorts of structures and applying it to, is this model that is the inputs that are going into this model, where did they come from, and how was it, how was the reinforcement learning done, and these things, the various development aspects of the model, and then the inference and everything else that goes into it after that, all of that. We think you can find ways to demonstrate that the owner of the data was in control of that through those same sort of structures.
Okay, so if we look at like a Spotify model, for instance, or we look at I'll bring it back, or we look at the OpenAI model. Every user has a key, not a key encrypted like a crypto key, but imagine if they did have their own encrypted key on the blockchain, mm-hmm. and all that data that was fed into that particular account mm-hmm. is owned by the user. Is that where you're coming from?
Yes, it is.
And then,
yeah.
Okay, go ahead.
No, you need to build other things around it as well, right? Because probably the most important one is confidential computing. So essentially zero knowledge proof,
right.
or trusted execution environments. There's a variety of different forms of confidential computing, sort of falling under the rubric of zero knowledge proof type solutions, right? And these things are really valuable. And those of us who are interested, and there are a lot of people in the crypto world who are often baffled that they're not more widely used. Now, some of it is because it still faces scaling challenges, but I think a lot of it is moving faster and faster now, particularly TEE-based solutions, trusted execution environments. Why does it matter? It matters because of the scenario you were just describing, right? I can only really say that I am owning that data and protecting it if I'm able to encrypt it in this way, right? So confidential computing allows us to run compute on data without any of the computers or the servers involved in that process actually having any knowledge of the underlying data, right? It breaks it up. It uses a variety of different structures within the ZKP models to basically achieve the same outcomes, right? Run a model, get a result, figure out what the answer is, but not actually know what that data is. And that means that the owner of that data is now protected, right? So yes, you have the key, which is a really good analogy there that you have, but you also have to have these other pieces on top of that. Otherwise, when I give that data, how do I know that the application
right.
that is using it is not running off with my data, right? Well, I have to know. The only way to know that is by putting this very powerful encryption on it, and yet enabling the compute at the same time.
Right. Okay. So we have the ZK proofs mm-hmm. there. Mm-hmm. Combined with that data and your own key on mm-hmm. a blockchain. But if any of your data is used in the future by anybody else, any other subscribers, similarly mm-hmm. to a musician on Spotify, mm-hmm. you could earn in a perfect world, in an ideal world, you can earn a royalty off of their subscription. Like if you're paying $200 a month, it's just quite a lot of money, which is all going back to OpenAI.
Well, I'll give a plug for a company that I'm associated with called AudioPool, that I think have a really interesting model for revenue to be earned by fans of musicians, and you can see an environment in which I'm the musician, I seed that into these audio pools, and then they do derivative versions of that, and the revenue from it gets kicked back so that the original musician gets a piece of it, but so too does the person who did the mix, right? And that's a great opportunity for musicians to sort of amp up their revenue, to broaden their brand by allowing others. Like we have a very, this is the record labels have a very, restrictive kind of approach to these things currently.
Very centralized.
Right, very litigious and
very
centralized
unscalable.
And restricting any use on it. If you flip the switch and just say, through these mechanisms of being able to track that, and of course AI is going to be a huge part of what those mixings are all going to be about, we could then track that. And you know what, musician who's struggling to earn money from the tiny 0.08% of a cent that you get for every stream, you've now got an alternative revenue stream from this whole mixing environment and from sort of other ancillary flows like branding and revenue, like all of that could all be built into these kind of tracking mechanisms. Right?
Yeah, because right now if you were an artist and you want to do a mix with some other artist, you need some very expensive manager in some Beverly Hills agency to pick up the phone and call that other artist and see if there's a deal that could be made.
Yeah, and
it's
there's
not
like
necessary.
an agent stepping in the middle who's like,
taking 50%.
They're just trying to take their piece of it and protecting it. And I've had enough dealings with these folks to know
it's not really life-giving.
It's a very painful process, yes.
Yeah, super. Okay, so before... I just want to talk about real estate.
Yes, good, because I can talk about another company that I'm advising and so is Bill, by the way, Proppy. We're both big Proppy fans.
Yeah, I know Natalia.
Yeah, she's great.
And she's pivoted so much.
She has pivoted, but she's stuck to her gut. Like and I think this is to be honest, the definition of a successful process. Like the other thing I'm doing, by the way, is I'm writing a book about Circle.
Okay.
And Circle's a similar story. Pivots all along the way.
Every entrepreneur.
Right. But at the same time, at the very beginning, a commitment to, as Jeremy Allaire puts it, making money move as easily as email, right? Was that Bitcoin? Was it going to be tokens and ICOs? No, they ended up with USDC. That's where they got to. So Proppy, I think, they were all about, on-chain real estate is going to be the way in which we're going to resolve the property rights question, right? That was a key foundational element of what they're doing. There's going to be, this capacity to run, immutable ledgers that would be good property records on that. Turns out they sort of end up pivoting into title companies and owning their own title company. And now they're doing a roll-up that's allowing them to acquire these old, antiquated, profitable but old and clunky title companies in places like Alabama, and they can radically ramp up their capacity to process titles through the efficiencies of their smart contract models and their new AI agent, Avery, they call it, who's able to sort of like really fast track the settlement process and everything else, right? So it's a great. It's still the mission of making real estate accessible to everybody, dropping the cost of it, getting all the red tape and complexity away so that there's a broader access to the whole thing, establishing that immutable property right, and all of that's there. But now they've got AI and they've got smart contracts and they've got things like BTC collateralized lending, which can really improve the whole financing bit of home buying, and then there's escrow solutions, and so it's really cool. I mean, I say this a lot, but and Bill and I have talked about this because when we brought Hernando de Soto to Necker Island for the first blockchain summit, that was my connection. I'd known Hernando for years, and we brought him in there, and we all got very excited. And then Bill and Hernando, I mean, I was indirectly involved, but Bill and Hernando actually tried to set up a company to sort of take all of Hernando's thinking and put it on a blockchain and build a model around this. Look, and then Bitfury ended up doing the Georgia's title registries and things like that. So everyone started doing this.
Georgia.
Yeah, but no one really turned it into the company and the sort of like the actual force for opportunity at an economic level at the time. We were just too early. But Natalia came in 2018, established it, and the things they realized is that to get this done, you had to deal with the complexity of regulation. Like every state has different laws. Like real estate is a heavily regulated industry. So if you're going to build something like, smart contract based on-chain escrow, you have to make sure that it is designed in such a way that it's compliant with laws around who controls the escrow money in any settlement deal and everything else, right? So they did all of that hard work, laid all that out, and then that put them in a good position to be able to then literally work in a mainstream environment that's sort of accessible because they've got the regulatory framework, and then bring the new technology in on top of that. So I'm a big fan. Obviously I'm an advisor, so I'm always going to be singing their praises. But it's I don't do many advisories, and this is one that I definitely went for because I felt like it's been something I've been passionate about, and I think they're the best in the game. So yeah.
Yeah. I heard the CEO of Hublot once say, in order to be successful, you need to be, you have to have one foot in the future, and 1 foot in the past. If it's only in the future, you don't exist yet.
Yeah.
If it's only in the past, you're dead. It has to be in the middle. And
You know where you come from, right?
Yeah, property is such a great use case of that, especially with real estate, right? Property is 9/10 of the law. Yeah. It's not the fastest thing to change. It's really held dearly to people.
Yeah.
So you have to engage with the past, which are traditional title companies, in order to make it to the future.
Yeah, exactly. That's a great way to look at what's going on.
Because we have seen, with tokenized real world assets, the wind has just been so dead since 2018. It's only now starting to pick up. And it's amazing what.
Yeah, no, the tokenization wave is suddenly working everybody up. And it could go in all sorts of directions, yeah.
Yeah, but I feel tokenized real estate, tokenization.
Mm-hmm. Slightly different things.
No, I mean, the reason why crypto has become so successful, why there's so much volume, is because the value is in the volatility, right? People flock to crypto because there's volatility. There's such a margin for increase. But with real world assets, where the net asset value, even with REITs, are usually trading below, NAV, right? It's not going to be. So it's not going to be like Bitcoin. We're not going to see.
So here's one way to think about this, right? So yes, from a sort of Bitcoin perspective and sort of any of the kind of straight buy and hold strategies that have driven all these markets with tokens around the world, that volatility and the capacity to get outsized gains on the back of that are there. But there's this other phenomenon in blockchain-based trading environments, and that's arbitrage. And the reason why it matters is because the turnover in blockchains is so fast that even if there's just a small difference between what this thing is trading on this place and what's trading on that place, the number of deals you can do, there's literally people getting 10, 15% yield just trading stable coins, right, on Curve and Balance on these things, because there's enough of a difference between USDT in Asia and USDC in the US that you can trade that. And so you make money from just these marginal differences. And again, that wouldn't be, if you're doing that in fiat, you wouldn't get there because fiat doesn't turn over. Stablecoins trade at 70 times more turnover than fiat money, just because it's a 24/7 on-time, real-time settlement environment, right? So translate that into tokenized assets, REITs, whatever they are, you're going to find a way to make money even if there's a lot more stability in the underlying pricing because of the dynamism that will come into it. And you start fractionalizing and fragmenting and there's more liquidity. All of that will just add to opportunities to move this around. So, I just got back from Korea. Korea is so far and away, just head and shoulders. I don't know what the numbers are, but so much more of a trading country than anywhere else. And that's why crypto is huge in Korea. Even though it's literally just one country, they're not even allowed to, Upbit, which is the major exchange there, is not even allowed to really operate outside of Korea. But they've got so much turnover because these people are traders. It's sort of built into the Korean ethos, right? To trade, which is not to say that they are buy and hold, hodlers. They're not. They're buying and selling and buying and selling and buying and selling. And out of that, they make money because the world is made up of those inconsistencies and differences. And that's what that's what Wall Street thrives off. That's what Wall Street is. It is a massive, big arbitrage machine.
Yeah.
Well, this is about bringing that arbitrage capacity once again, giving access to everybody to be able to do it. Right.
More opportunities to wheel and deal. Hernando talks about the velocity of capital a lot in his book, which is what you're...
Exactly. Velocity is the term, for sure, yeah.
The
velocity, he's absolutely right, because it's the same... Yeah, I mean, you could say that blockchains have removed that sort of bureaucratic restriction to the turnover of assets that he's referring to, an even much more extreme version that I was referring to with fiat money. He's talking about, like, you can never sell your house because you can't prove it's your asset, and so there's no velocity in the turnover there.
Right. Or, because there's no proper title.
There's no proper title. You
literally can't
titling
wheel it or deal it once.
Titling and bureaucracy and all that stuff becomes a massive impediment to turnover.
Right.
Which then reduces the velocity of capital.
Right.
So blockchains are velocity of capital machines. That's a great way to think about it.
Right. So... yeah, it's just the velocity of capital.
They're capital accelerators.
It literally builds the market.
We should use that. We'll get capital accelerator. Yeah.
Yeah.
Maybe it's all right. Maybe it's
it's great.
Yeah.
But back to our AI talk.
Mm-hmm.
Without sovereignty and there's no velocity in the AI space, and it keeps it quite...
Yeah, I mean, there's plenty of... there's velocity coming for different reasons, right? So I don't want to say there's no velocity. I mean, there's velocity because these machines
But it's much less
powerful.
than what it could be.
Well, that's right. It could be more because you would open it all up again. Once again, it's about property rights, opening everything up. But so, like, it's just a matter of scale, right? Like, there is definitely velocity in AI because the recursive or sort of iterative nature of the learning is just building on top of itself and getting smarter and smarter and better and faster, right? So there's velocity in terms of development.
There's velocity in terms of its nature.
Yes. Yeah, the nature of the actual technology.
But in terms of ownership.
Right. No, it's all concentrated. Now, like, you know, I don't know what the latest numbers are, but I know Nvidia last time I was looking at these numbers was about 3.5 trillion. It's now 5 trillion market cap. Back then, it was the Magnificent Seven, as they're called, right? The big, you know, it's Meta and Google and Microsoft and Nvidia and Amazon and Tesla and who's the seventh? That'll come to me in a second. Those guys had $20 trillion of market cap. I think it's bigger than that now. And obviously, there are pension funds, and all of us, in some respects, every one of us, probably most normal people, have got a 401k or own a bit of any of those stocks because that's where it's all invested. But we've got no say in it. We've got no, like, this is not a... The question here is not whether you own a little piece of it. It's do you have control over where the resources of this gigantic, powerful AI economy are going to go? And you don't have any control. Your proxy votes are not going to decide whether or not, you know, Jensen Huang is going to acquire this or that new startup. It's not up to you. It's entirely up to the guys that sit at the top, right? So we have a concentration of economic power that, for all the reasons I described before, I just don't think is healthy. And if we break all that up, then, yeah, we unlock innovation. I mean, we need startups to build alternatives to that, centralizing hyperscaler model. And they're going to have to be, like, incentivized to do that. And if the easiest exit you can find is that Jensen Huang is going to write you a check, then your incentives are aligned with not really building something radical and disruptive. Actually, I don't want to knock NVIDIA. I think NVIDIA actually are, of all those companies, the most innovative in terms of looking at edge compute in a variety of different ways around this. But it's still the same idea that with this economic concentration, innovation gets captured all the time, right? This is how Facebook and Google grew. They kept acquiring any new thing that looked like a threat. It would just get acquired and brought into them. Well, now the same thing is happening in AI. So we need to keep all that innovation open and out there. And it's actually one of the reasons why I'm interested in tokenizing, things like compute and data, because then the incentives are different, right? It's a network effect that drives the value proposition, not the concentration of share price value through the sale of your technology to one of these big players.
Yeah. Okay. Last question, just before we talk about tokenizing compute and data. How one of my advisory clients, Paula Taylor.
Oh yeah.
In Perth,
Paula,
who we love.
Yeah, I'm also advising her latest venture.
Okay,
as well.
so our mutual, that's exactly what they're doing. How do you see that working?
Okay, that's
tokenizing compute.
Yes. Okay, so I think what's really interesting about that is that we've got these sort of distributed communities that have their own sovereignty. We're talking about native Australians, right? Like Indigenous Australians.
Yeah.
Who have communities that they're sitting in, places where there is just an abundance of solar power and wind and everything else, right? So there's this huge untapped energy resource. And so the idea that you can co-locate, AI into those settings to then extract, to create a demand offtake value for that power is really appealing, right? But the tokenization bit gets really interesting because, you can build governance amongst these communities. And they are, tribal communities that don't have the same sort of centralized models. They're more sort of diffuse. And so you could have an environment which these different communities could all, through the governance models in a blockchain, make some decisions about what sort of tech they would build, et cetera, et cetera. But I think just broadly, the idea of all of us in some way, owning a piece of a data center or owning, the data that's going into them, is just going to have to be that one of those other elements that proves this control, right? Because if you've got an agent that is, you've got your confidential compute, you've got, so that you've got that privacy protection, you've got, a data ownership structure, you've got verifiability in the model and a variety of other things. But at the end of the day, the compute is running in a data center owned by Larry Ellison and Sam Altman, then you still have that one last vector of control, right? You have the risk of failure. We saw this with AWS, where there was a central point of failure that led to the shutdown across AWS. All of that is now just, at the end of the day, you're still stuck with power control in the hands of a third party. So I think we need to own every piece of the stack through these tokenized structures and have those sorts of models. So there are people building those sorts of things into how we build distributed structures around compute, but the energy as well could go into that, which is part of what Paula's and her team are building.
Yeah. Okay. Well, just to wrap up, I think the big wake-up call, there's a big wake-up call here. We must not give away the printing press of our time.
Yes.
Right? The opportunity to do so is right on the table.
Don't give it to
and
the church, please.
We need to get in and get involved and participate as much as possible.
Yeah. And there's huge opportunities you could do, right? I think there's money to be made through this, open access approach. Yeah.
Yeah. Thank you, Michael.
You're
Thank you so much for your
me.
enormous contribution to the blockchain space and the AI space, and for helping us to all refine our philosophy.
Love my ACTI friends, so it's great to sort of be doing something for that community. They're all great.
No, that's true. And you're superb. Thank you.
Thank you.
Okay.